Hello and welcome to the Doris Report. Today is January 26th and we have had a very interesting weekend. I know a lot of people were fearing the results of the Greek elections, and the Syriza party did end up gaining a majority. However, it looks like they are willing to still work with the Eurozone and the ECB. I don't think that they're looking to exit so far, although that could be a nasty situation, but we can talk about that later. But for the time being, it looks like they're just going to be hard bargainers and really look to try and taper down these austerity measures and juice the Greek economy. And ultimately, as some of the Washington think tank types check out the CEPR paper, that was just released. If you Google that, they make a great point. That is, compared to the ECB QE program that was just announced, 60 billion euros per month, really the amount it's going to take of concessions to Greece to really smooth this thing over are fairly minor in comparison. So I expect this thing was just a lot of fear, and now that the result that the market was pretty much expecting anyways is in. I think markets are going to be able to move beyond this. If we look at the market's initial reaction here on Monday's session, this is just today's performance so far. Looks like energy, both the producers and the actual XLE ETF, both got a boost. It's probably not necessarily related to Europe. However, the bump over here in EFA and EWJ, sort of global larger cap equities, is probably related. Also, we're seeing strength in the gold miners, so it's looking like this latest round of global central bank easing is taking effect. People are just expecting us to pretty much print our way out of our problems, and you're also seeing some residual effects in basically the real estate markets. Both the home builders and it looks like U.S. real estate both got a bid today, so looking like nothing but clear skies ahead. But we all know that this central bank sugar can't last forever. And just to reinforce that point, we see that it's inevitably the 20 standard deviation type of moves from central bank policy shifts and turns like the Swiss National Bank that are really going to make the moves in the market. And as our good friend here, Andrew Hecht from Technomentals, points out very adroitly, this is really 2015 is really going to be the year for traders and not necessarily investors. The easy trades are just really no longer there. I mean, you could probably pick up a few percentage points just trend following any of the major asset classes. But basically, what we're dealing with is a situation where, as Hitler says, you can't trust the central banks because they always lie and betray you. And I'll attach a link down below so you guys can check out that YouTube video. Very, very enlightening. But anyways, yeah, we see situations like this where FXCM is just absolutely destroyed. This is the quintessential going to zero chart, dropping from $17 down to $242. Currently, interestingly, Barclays, our notorious contrarian bank analysts, actually upgraded their price target on FXCM back in December to $19. And what do you know? Not quite $19. So between that Barclays upgrade before the big break and a tool that I'm going to kind of give you guys a little tutorial on here, if you just go to my website under quick stock valuation, any individual stock with financials, you can go in. So if we were looking at FXCM, and this is just a fundamental basis based on basically earnings and enterprise value, which is a very old school metric, but if you're a longer term investor, it's really only one of the few metrics you need. We just get our data over here. And so what we're looking at are three basic metrics: our market cap, which is 111.79 for FXCM. How much profit are they making? Their income, in this case that's 4.4 million. And these numbers do have to be on the same magnitude. So if market cap is in billions, then income would also need to be in billions. And just a key sort of advice is if the company doesn't have profits, this formula is not going to work. So for any of you Amazon investors, you're out of luck until that company can finally turn some profits. And our final metric is debt divided by equity, which is 0.61 in FXCM's case. And we get our final valuation, which is $1.08. So what do you know? It seems like we're quite a bit closer to $1.08 all of a sudden now than $19. So it does show you that this very basic earnings divided by enterprise value is a valuable formula, and you can use this tool for just about any stock with actual earnings and these other two basic metrics. So value away. So this really boils down to a great quote by Joel Greenblatt, that the odds of anyone calling you on the phone with good investment advice are about the same as winning the lotto without buying a ticket. And so this really just goes back to this observation that a lot of analysts, most notoriously Barclays analysts, are ultimately on the sell side. They're trying to sell advice for people to buy stocks. But the thing we notice over and over is what differentiates the wealthy from the broke, or just the average Joe six-pack retail investor, is that the wealthy sell their assets, and they sell their assets when they're either fairly valued or more likely richly valued. And so it's kind of the universal law of buyer beware. And specifically, because I've talked a little bit about the real estate markets in the U.S., and our leading indicator, Orange County, does look like it's rolled over and is indicating some type of a threshold later on this year. But ironically, we see Barclays here talking about how they think that REITs, real estate investment trusts, are going to struggle during 2015, which is kind of interesting, because if you're taking the contrarian approach, okay, so why would REITs be attractive? And one of the interesting stocks that they ended up cutting from overweight to equal weight, even though they maintain the price target, is Essex Realty. And the reason why Essex is so interesting is because what we're looking at is a minimum spanning tree of the entire S&P 500 here. So it's basically looking at the correlations between every single S&P 500 stock and then grouping them based on sort of similarity. So you end up getting these very interesting tree-like branch networks. And if we look over here at this particular junction, we see that Essex is very central. You see a lot of different streams of companies end up branching into Essex, which shows that it's sort of got the highest correlation with any one of these components. And you see a lot of these Simon Property Group, they run a lot of kind of first and second tier malls, Public Storage, America's biggest storage company, Kimco, Vornado Real Estate, and then so those are all basically U.S. domestic real estate. And so Essex basically acts as a proxy for all of those. And then you'll see sort of downstream we get to PLD, which is actually kind of a global. So that's sort of this span right here is the jump to global industrial real estate properties. If we take a look at some of the top 20 components that are all along those same lines, very central in that correlation network, Essex is very strong right now. It's 1 month performance 7.7, RSI very hot 77, but that's fine because we know it's not shortable, well above its moving averages, and its performance on the quarter has been pretty hot, but for the time being this is definitely a Momo stock. And if we take a closer look, we see that the company is mostly involved in apartment communities. It's got 158 of them that it's running, only 5 commercial buildings and 5 development projects. But what's most interesting is the markets it's involved with. Almost all West Coast major markets: Los Angeles, Orange County, Riverside, San Diego, Santa Barbara, Ventura, so SoCal, also San Francisco, and also Seattle. So I think the fact that this kind of bellwether stock is experiencing what looks like a big exponential rush, it's probably ultimately positive for the rental markets, at least in the West Coast. Thanks for watching Dorsey Intel, and if you like what you see here, please like, share, and subscribe to my channel. Until next time, good hunting.